This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It is an absolutely beautiful evening here in the New York City, New Jersey waterfront on March 19, 2019, approximately 8:31 p.m. Us New Yorkers are always fashionably late, so I do apologize for the slight delay. A lot of things to take care of, family, dogs, cats, all kinds of things. Full disclosure, this is purely for financial education, not for any solicitation or advice, and we shall begin. Quick reminder, these sessions are recorded. These free sessions are uploaded to the Google YouTube channel, Clueless A Trading, for viewing by anybody out there, all members, free trial subscribers, as well as all your friends and colleagues and anyone out there with the internet connection. So do us a small favor by spreading the word. We don't have big time budget for promotional marketing, and we don't like going around telling people they're going to be billionaires the next day. Like Bill Gates. So we don't really do any aggressive marketing. So word to mouth is what Clueless A Trading runs on. And we have terrific members who have been with us for years and years, and many more who are coming and joining us. So straightforward and clean. That's what it's all about. On a second note, the Instagram channel is extremely important. I keep on emphasizing the importance of following the Instagram channels. If you just go there and look tonight, you will see some amazing options charts that we have delivered for our members. Some of you guys might be in it, some of you are not, but at least you can see what was alerted and what happened, and those are mind-boggling. And those are actual alerts that are delivered on the real-time Twitter feed. And at the end of the evening, I go out there and post some of those options charts, which some of them are already on the Twitter feed, but most of the time during the busy trading day, I cannot post options charts. I do it at the end of the evening. That's the reason why the Instagram account is so important. So if all other members who are going to be listening to this later on, keep in mind, if you're stubborn enough to say, oh, I don't have an Instagram, well, you're doing yourself a disfavor, because if you just create an Instagram account and then follow Clueless A Trading on Instagram, you get to see what we do and what you can do. It's really that simple. On that note, let us begin. So the free training sessions that I do for my members, let's go ahead and do something really quite simple, which is let's go over the tactical charts that were posted today, yesterday, and let's go over a few of them and see what you guys understand, what you don't. And feel free to stop me and ask any questions you want, because that's what these sessions are all about. If you can bear with me one quick second, I will be back in about 30 seconds. Okay, I'm back. So let me kick off by looking at some of the things that I put out there. All right, just today, and let's go over them. So here is before I go any further, let me just explain a couple of things here. The discipline of technical analysis, and I don't want to sound like a boring old fart professor, or like, your grandpa telling you that if you did this, you'd be worth $1 million, unless your grandpa is Bill Gates. That's a different story. So the thing is that technical discipline is not something that comes naturally to people. It is something that you have to really fight for. It's like going to the gym. It's like lifting weights, like Nazir here does. Okay, it's like following a process, and more you do it, you start seeing the results. That's exactly what it is. Okay, it's not something that just comes naturally and says, oh, I understand the stochastics, and boom, that's the way it's going to go. It doesn't work like that, because along the way there are minor hiccups. Along the way there's major volatility in the markets. We saw it today. We see it every day. It doesn't change the overall path and the direction of what's happening, but short term it starts to shake people out. Markets don't always go up, markets don't always go down, but you got to catch the cycles of when they're going up, where they're going up to or close to it. And if you look at my charts and stuff that we're going to go through tonight, which you guys should be looking at on the real-time Twitter feed, you'll see that things that I put out there on with the overall direction of the market is, that's exactly what the market hits. The most amazing thing is, which sometimes it amazes me, and I say it with all humility, is the fact that I'm drawing these taking these charts, whether the S&P 500, the futures, whether it's a SPY, whether it's a stock, whether it's Apple, whether it's Amazon, whether it's Booking.com, whether it's Nvidia, whether it's Google, whether it's you name it, like a whole bunch of them. And notice how close to where I say they're going to go, they go to. If they're pulling back, I show you where the pullback levels are, where the buy zones are. Whether it's Boeing, did you ever hear anybody out there, other services you follow, people in the media who said buy Boeing at the lows? I don't think so. Did they tell you to buy Boeing when it was crashing and burning down in the one second. In the, what was it, 363 level? Did they ask you to buy Boeing at 290 when it did a double bottom twice back in November? No. Did they ask you to buy Boeing at 370? I'm sorry, 366, and then it jumps up to 386 within 15, 20 minutes? No. But if you start to follow the practice the discipline of focusing on the charts, you have a fair chance of making some really good money. Now, saying all that, the thing that really screws up all of you, and sometimes screws me up too, but I control my emotions better than most people, both in life and in trading. Because just like in trading, trading will teach you more about your own character, because your real money is involved, than you ever know in your life. I don't care where you came from, whether your father was delivering Uber and you became a multimillionaire, whether your father was a brilliant surgeon and you became a multimillionaire, or whatever you did. It's not where you're coming from, it's where you're going. Okay, so if you completely always think that everything in life, and I speak from personal experience, is always against you, and trade and you just cannot be successful in trading because it's always against you, then it's the same thing that's applying to your own life. Really confident people in life who have overcome major obstacles in their life tend to be great traders. Great traders are not Saudi princes or princesses. Okay, they're shitty traders because money's falling from the trees. I'm not picking a Saudi, like it could be some jerk out of Long Island or somebody from LA or somebody from Canada. I don't care. The thing is, if you have way too much wealth to F you with, then you are going to be a really crappy trader. So you got to think about these mental stuff before you even attempt to be a trader. You got to be hungry. You cannot be scared. Yes, you're allowed to be scared, but that fear should translate into positive stress. Okay? So the key is that you, in order to control your emotions, that's really what it comes down to. And I know I keep on saying it 1,000 million times, but it is the fact, because it applies to me, it applies to all of you, is the fact that if you have to control your emotion, only way you can do it is to try to become really robotically disciplined. It takes time, I understand that. It takes mental energy, I understand that. But if you're going to make FU money, on making 300-400% on your options. You're not going to do that by feeling comfortable. Okay, this big move alone is worth 400-500% on your money. Now, if you don't know how to control your emotion, every single red candle that you get, you're jumping out like a little wild monkey on a hot tin roof, what we call MOHTR. Look, everything I speak, and I'm a very straightforward guy. Some people like me, some people don't. Most people like me. And I don't give a crap about people who don't like me. Because what I'm trying to do here at Clueless Day Trading is I'm trying to help you all. I'm not your grandpa, I'm not your grandma, I'm not your mommy, I'm your daddy or your daddy. I'm not looking here to get you rich. I'm looking here to give you the tools so you can make money for yourself. Period. That's it. I am not your financial advisor. I'm not your broker. I was all that back on the days on Wall Street. Okay? I'm done with all that stuff. I'm here to give you guidelines and very powerful tools on the technical analysis side. Look at Kramer last night. He's explaining stochastics. He's explaining McCallum oscillators, blah, blah, blah. He's explaining cup and handles on Kramer last night in the most simplest terms. We are doing this on the very advanced term every single day. That's a fact. And our charts are far more detailed and far more advanced for you to make money than anything out there, and most other services out there. Please. I'm not just saying this because I feel like saying it. I'm saying this to wake you all up. Okay? So, on that note, let's try to make this next, whatever, 45 minutes or so useful. So you're looking at a chart here on the actual market. Everything that you're doing on the front end, most of the stocks, are dependent on how this moves. When you're looking at something like this and you're and it's actually showing you what time was this put out? This was at 12:30 in the afternoon. After that, the market pulled back, obviously. The thing is that when you're looking at something like this, you really have to focus hard. Now, if you're not an active day trader, I understand you cannot react to that very quickly. So in that case, if you need to be set up on the swing trades, which I keep on saying, way ahead of what happens. You get a big bump like that at the beginning of the day. Today was the 19th, right? So you get a big bump like that. Then just sell. Real simple. I'm going to keep this real simple. Sell. Go away. You're up 30, 40, 50, 60, 70% right off the bat at the open within the first hour on a big gap open. Then and an acceleration, by into 10:30 or 11 o'clock. Sell it. Don't look back. If you can watch the market during the day, you had that money, put it away. There are continuation patterns on many different stocks. They'll keep on running, then they'll pull back. Don't forget, you're not the only one trading the market. We are actually nothing. We're like the pikers, the little fish like running around the whales. The whales are the hedge fund guys. They're running algo HFT black box programs every single 15 minutes to an hour. That's where the volatility comes from. So on the days that you're off, many of you guys are off during certain periods of the week, then you could day trade all day long with small amounts of money. Or you can at least see that if there's a breakdown coming, then you are going to the same chart, by the way. One second. Then you're going to basically react accordingly. I'm trying to pull up the same chart at the end of the day. Bear with me 1 second. So this is 12:30 in the afternoon, and this is, and which reminds me, my Twitter feed is so detailed. No bullshit, guys. Okay? Ladies and gentlemen, no BS. Are so detailed. in explaining the dynamics of what's happening on the market on a real-time basis every single day. You don't even need to look anywhere else. So here was at 12:30. And this is very important. Simplicity is what makes great things happen. Complexity, if you started off with something really complex right off the bat, you'd never finish that project, right? Exactly. So you got to start off, come on. You've got to start off with the simplicity of it and then understand the complexity of it. I don't know if you guys understood what I said, but I'm sure you did. Oh, there it is. So, oh, that's nice. Okay, 12:30, 12:48. So here's at 12:30. We're up here. We're starting to hit the upper end of the level. 12:30. Look what happens at 12:48. Boom. This is 12:48. Same chart. You get these big sell programs coming in. Generally speaking, the way to manage this from your own end is if you're up on it a lot, I keep on repeating at least 2 or 3 times a day, take full or partial profits and just walk away. If you want to. Look, I'm a professional trader. I live and breathe this stuff. I can move and maneuver faster. It's like driving a Lamborghini Aventador or a Huracan, okay? Or a McLaren. Most people driving a normal car will not be able to drive those type of sports cars because they'll be wrapped around a tree, like I've said many times. So it's the same thing with trading. The better you get, the more professional you get, you'll be able to navigate these moves a lot quicker. But when you're starting out, stick with the basics. You're up on something, sell it. You see a beautiful swing chart like a Domino's Pizza, we're going to look at next, sit on it. Because there's a lot of upside left. There's a major upgrade coming out of a major investment bank on Wall Street. Sit on it. But if you're going to be doing dynamic trading on the fast-moving SPYs or SPX or QQQs or IWM or DIA, then you have to be dynamic. You have to know how to turn the corners on that 600 horsepower supercar or a regular car with 600 horsepower modified, if you guys know cars, okay? Otherwise, just put your hands on the wheel on the nice, whatever it is, Toyota, and just sit there, and you'll get there. That's a swing trade. You don't have to navigate every twist and turn. So first decide what you want to do based on your time factor, based on your risk level, then you do the trades. Do you both understand what I'm saying?
Yep.
K-Bot, do you understand what I'm saying?
Yes.
Okay, because if somebody's going to be trading Tesla or that type of stock or a Netflix, not necessarily Apple, or a Google or Amazon. Amazon's on a beautiful uptrend up, but still, they're extremely volatile stock. They drop 10, 15 points within seconds because the big hedge funds are trading it. Then be ready to trade that type of thing with the notion that you're not going to freak out every time it turns the corner, yet the trend is up. You want to sit on a Domino's pizza type of thing or a Chipotle or a Tandem Diabetes or Blue or those type of swing charts, sit on them. You don't need to drive, you don't need to turn corners at 80 miles an hour. Now, these are real words of wisdom coming from somebody who does this for a living and has gone through more mistakes than you'll ever make in your life, because nobody taught me the way I teach you guys. That's a fact. So this is what happened at 1248. Boom. The market drops about 60 to 80 points right from the top. You see that happening. This is the hourly chart. Boom. A bearish engulfing candle appears. Doesn't change anything. Once you guys understand the dynamics, or once you, if some of you wish to, which many of you have, and you find that it'd be extremely helpful, which it should be because it makes you more money, you enroll for the advanced coaching session, then you'll understand that these type of moves mean actually very little to your intraday trading or switching positions completely on a swing trades, because there's a lot of complexity involved. So this is the simplest thing, the stochastic reset going on a 1 hour. Things are going oversold. I even put arrows down there. Some people pick these things up faster. Some people just have a very slow time picking up these things because they're too fixated on the price. Of course, we're fixated on the price because the price is what determines what your P&L is looking like. But it doesn't mean that you need to do stupid things at the wrong times just because the price is dropping because of volatility. So I even put arrows and stuff here. And if I remember correctly, we actually came down towards these levels. Let's see if I have that. So what happened here? This is your 15-minute chart right there, right? Falling. Many retail traders freaking out, oh my God, this is it, look at this, blah, blah, blah. What happens after that? It bounces off exactly the dotted line, which is the acceleration uptrend channel at 2841. This is at 1 p.m. Okay, immediate big hammer reversal. By the end of the day, if I remember correctly, I put so many charts out there, hold on. I believe that we went to, we were still holding the channel, and we broke that channel. We fell below, and then we now are approaching the retest down here. It came to the retest. I put out a chart out there saying that it's going to basically try to hold that, and it held that and immediately bounced. This was at 4:01 p.m. Look at that. So the reason I'm explaining this, because if you guys try to understand, if you guys have a basic understanding of how the dynamics of this volatility works, you're not going to freak out on the front end when you're sitting on a Boeing or some other type of stock, or any stock, for example, because we own the options which are pulling back. You'll know when you can dollar cost average and enter. Now, saying all that, anything can happen anytime. That's just a part of trading. If you want to be a trader, you just have to embrace risk. Without risk, there is no trading. Without risk, there is no options. So if you think this is going to be a beautiful Sunday picnic with your kids, with your dogs, with your cats. I don't know if you take your cats out to the park, but I'm not quite sure. We have 3. I haven't taken out to the park. But then this is not the type of stuff that you guys should even be attempting to do. This is your daily chart. I'm showing that there's a big red line here. If we break this, then we'll probably come down to the lower end of the rising wedge, and we could possibly do that by tomorrow. Let's take a look at where we are right now on the futures. FedEx crap, that was a options trade on the basket. So that trade is not going to work out at the open. We'll see what happens after that. We had a basket of different stocks. One of them went up nicely. Steelcase, SCS, TME was down. That's 10-cent music. And FedEx was down. So that means the FedEx calls on the basket are going to be toast. And if the stock starts to reverse, we will certainly play the reversal trade. So let's take a look. This is a live chart of, so this is where we are right now after hours. We're right here. There's a good chance that we come down and retest 28.23, which is 8 S&P points below where we are. And if it breaks this, then I have to look for a nice short. That's what these support lines are. Brings me to my other point. For some of you who don't know how to read charts, green lines are resistances, red lines are supports, uptrend lines are support. These ones, this is an uptrend channel. This is another uptrend channel. You will notice that every time the market's going up or down, it'll stop, hesitate at each of these lines before they break out. And when the markets are falling, they'll hesitate on each of these supports before they break down a bit. And this is all part of technical trading or understanding the markets. Why is the reason I don't freak out? I should be freaking out a heck of a lot more than you guys, because I'm putting in bigger trades and positions out there, multiple positions, as you can see from my Twitter feed. So my account sways up and down, yet I don't seem to freak out that much. Do you ever hear me cry? The only time I cried is when my parents passed away. And when my dog passed away, one of my dogs passed away right before Christmas, as you know, Polo the fighter, Polo the toy pom. You don't cry because you don't know how to manage your accounts. You get angry. You get angry at yourself and you attack the markets and make it up in other trades. Or you attack the same trade and buy and dollar cost average. You don't cry. These are life lessons you should learn from trading that will make your life better. It's a fact. I don't care how many times you go to the gym, because the muscle strength does not make you a stronger person. What makes you a strong person is your mental strength. And mental strength is the only way you test mental strength in the biggest possible way is when you face adversity. And in the case of trading, when you face volatility. Think about that for a second. I'll be back. I'm back. So this is where we are right now. There's a good possibility that we hit this support level, which is 8 points lower. Let me see on one of my phones. I don't have Thinkorswim open right now, where we are with futures. And you guys should always be monitoring futures, just for the heck of it. Instead of seeing who's getting 130 million for 4 years on some sports teams, which is completely a sick thing. Futures are down for about 5 points right now. I watch futures. I'm not saying you shouldn't watch your favorite, your favorite guy in your baseball team or your football team, but when they're making 230 million for 6 years, 130 million for 4 years, doesn't it make you feel sick? Exactly, because you ain't ever going to be a football player. So only way you can make millions of dollars is through trading over time, in my opinion, because all you're doing is making those guys richer by going to all the games. And sports betting. Sports betting is the stupidest thing ever, in my opinion, because all you're doing is basically putting more and more millions of dollars into the companies that do sports betting and into the pockets of all the players. It's a fact. I know most people won't like me saying that, but it is true. Same thing with celebrities. So I'd rather bet on the market which is quantified gambling, than betting around on online sports betting and other gambling, which I never do. There you go. So now you have the support levels in place. Questions before I move on to stocks? Please, if you have any questions, just ask me. If you have no questions, say I don't have any questions.
I'm okay for now.
Okay. K-Bot, do you have any questions?
No, I'm good.
Okay, sounds good. So this is the way we're looking at the market on a short-term basis. This is the way we're looking at a market. Let me pull up the 1-hour chart. This is the way we're looking at the market on a swing basis. And a very simple thing I'll tell you. I've said this a zillion times. I'll say it again because you guys, you're a new member and K-Bot is a returning member. So she's getting refreshed into the dynamics of, all the technical stuff. When the stochastics get deeply oversold, stochastics is the first derivative of the relative strength index, the RSI. Look up the definitions on Investopedia. That shows you how much juice is in the market or the stock. When it gets overbought, you tend to get a sell-off that will what we call reset into oversold. Every single time that we got oversold on a 1-hour basis, the market had a reflex bounce. At this point, in between the structures I've put in place, this is where we are right now. We are attempting to retest this channel, this one. Make this thick. There you go. There you go. And if we break below that, then we're going to come to the lower end of the channel. In the meantime, the stochastics are deeply oversold and can remain oversold for a couple of hours into the open tomorrow before the Fed decision, which in my opinion is generally a market positive event unless the Federal Reserve and Jerome Powell completely changes the tone and language and the bias of what they are doing, which is slowing down rate hikes and possibly just stopping. I hope they don't do a rate cut. That means things are in really bad shape. A rate cut is desperation, just so you all know. A rate cut means the US economy and the global economy is in so much crapper that they need to cut rates. If that happens, I will short the market for a good 1,000 points. These are macroeconomic stuff that I explain and teach on my advanced coaching sessions for all of you who don't know what all this means. They are not that difficult to understand as long as somebody explains them to you guys in a simple way, which most of you never bothered taking economics in college, and your professor was really crap and didn't even know what the heck macroeconomics was all about. So you don't quite understand the correlation between why a rate cut is not good for the economy, why quantitative tightening is not necessarily bad, and why quantitative easing that happened after 2009 continued through 2016, I believe, was not a bad thing. So you learn all that on the ACS sessions. You learn all that at Clueless 8 Trading. I don't think any other service actually teaches you that because most of them just don't even understand economics to start with. So this all applies to your trading, and strong traders need to understand those elements so that they can make the big trades and make a crap load of money. You don't make money by scalping $1 on options. It's a fact. So this is where we are right now. Futures are down about 5. So we're getting deeply oversold. We should get a reflex bounce, and I believe that comes after the Fed meeting. In the meantime, if we pull back more, to me, that's a gift. If we pull back here to 28 in the low 2800s, which means the Dow will fall another 100 points or 150 points, to me, that's a gift. Because this was the main bullish consolidation channel that I was looking at. We broke out of it, we retested it, we broke out of it, we retested it, then we broke out hard and we entered this acceleration channel. And if things go right, we are going to go to 2880. Could happen by tomorrow, most probably will happen by some sort of real news coming out of the US-China trade deal. But so far the news is good. That's it. Any questions?
Nope, I'm good.
No.
Okay, sounds good. That's a very aggressive no. I like that, K-Bot. All right. So let's take a look at a blue screen. No, let's take a look at where did DPZ go? So let's talk about a chart because that's what we do, right? So let's talk about tandem. There's absolutely nothing wrong with this chart. Do I like it when the stock is down to 68 around here and just retest that? It's still an uptrending, beautiful cup and handle breakout. The stock falls from 74. Change the color. The stock goes from about 74 to about 69. I've been showing repeated charts on the hourly basis, and it's no big deal. You buy them. The calls are $1.50. They went to $1. They went slightly below $1. I bought a bunch of them. They went to $1.50. Right there is 50% on your money intraday. But that's not what you're looking for. What you're looking for is the completion of the move at that $80, $90 level where your money triples, quadruples, and quintuples. Stay patient. That's a swing trade. Let me ask you a question. Just give me a straightforward answer. No bullshit, okay? When you look at a chart like this, does it scare the living daylights out of you, or do you feel that it is going to go higher? Not because I'm putting it. I'm asking about your own initial thought. Nazir.
For me, I would have bought at the 50 level where the cup and handle is about to break out, but
Okay.
at this level, it seems a little bit stretched to me.
Okay, that's the difference between you looking at a stock on a normal emotional basis, because let me put it this way, you didn't even have a freaking clue what the stock was at 50. So let's start off from where we are right now. What you answered is actually very smart, because this will teach a lot of people. When we look at it in a robotic basis, because we understand technical patterns and stuff, this is a very bullish pattern. This is a cup and handle with a hammer showing us that we still have roughly 9 points left in the stock. Don't always think about where you could have bought it, because you weren't there. We were buying it at this level. We played the earnings on the stock from 46 and it jumped up 15 points into the 60s. And then we rebought it back at around 61 after it hit 70. And now we are moving on with it. On a swing trade basis, always remember one thing. It's not where the stock is coming from. It's where it's going. And where it's going from a technical perspective is here. Now, in the meantime, if it breaks below the 64 level or 60 level, then obviously it's going to pull back. So what you said is actually very nice, is what a average retail trader looks at. I would have bought it at 50. Sure, you would have, but you didn't because you weren't there. So let's look to see why would somebody like me, who is a very serious trader, be recommending the stock, which I did here, still recommending here, because from a technical standpoint, this is called pattern completion. Right there. So thank you for your response, and I explained to you how a technician looks at it. Very, very bullish. It's broken out of this large bullish consolidation channel, and now it's simply resting a bit as it's going higher. And I want to repeat, you could have made 50% of your money just today on it, on those options. K-Bot, question, please. And please, if you don't have any questions, that means you're not thinking. My question was, when you look at a chart like this, which is a beautiful cup and handle breakout, and don't say something just to get yourself out of the classroom, okay? I'm not gonna try to test you out here whether to pass or fail you. You're the only one who's gonna pass or fail yourself. I'm just a very, very good coach. So when you look at a chart like that, do you see what I'm talking about? That there is a gap to fill here. It's not a gap.
Yeah,
It's more of a
I was looking at the 80 level.
Yes.
That's
So
the previous red candle where it broke down from.
exactly. There you go. So these are the type of things where you want to buy time. That's why I keep on saying buy the April 18th 75 calls, not even the 80, the 75. So as it suddenly pushes up, it's all going to happen within 1 or 2 days, just like that. Then those calls which are at $1.50, $1.60, $1.40 will be worth $4 or more, or $5, and you're going to be feeling beautifully happy. Exactly. It will pattern complete at this big supply zone or breakdown level. Exactly.
I actually had one more question if you have a minute.
If I don't have a minute, I'll just basically shut down the webinar right now. I'm giving you a
No.
lot of minutes. And stop being so
No.
frigging polite. Okay, go ahead.
On the daily time frame, I was also a little bit worried about the there seems to be like a negative RSI divergence on the daily chart.
This is actually a weekly chart. Were you talking about the daily chart on this stock?
Yeah.
Yeah, I don't have the daily directly in front of me. I don't have my Thinkorswim open. I'm mostly looking at this chart from a weekly standpoint.
Okay.
So yeah. So yes, you are correct. Probably on the daily there is. Let me look at my other side. One of my other screens. On the daily, Tandem is Tandem. On the weekly, I'm purely focusing it on the day. Let me see. On the daily, both the I don't look at RSI. I look at stochastics, which is the more advanced version of RSI. None of the stochastics, the slow or the fast, is showing any deterioration whatsoever. They are both staying above 80. The slow stochastics, which is a very strong measure of swing trades, is still above 80, moving sideways. And on my daily chart, on my Tandem, which I showed earlier on, it's still targeting the upper Bollinger at 82 and a level and a resistance 2, resistance 1 at 74. That's exactly where it pulled back from, and a resistance 2, what we call R2 at 77. So there is no deterioration on the stochastics on the daily. So not sure exactly what you're looking at.
I was actually looking at the RSI itself, but that helps.
I don't look at the RSI. I look at the stochastics, which is a far more accurate trading indicator than the stochastics. So again, look at the RSI as much as you want. I'm telling you what works for me. I always talk about the stochastics. I always show the stochastics. I show the slow, the fast. So I cannot comment on what you're looking at. You see,
No,
let me finish. Everybody and their mothers and their grandfathers and their pets look at the RSI. Why not look at something more advanced, such as the fast and slow stochastics, the McLaren oscillators, and things like that? Would you agree with me?
Yeah, I was going to say that helps. I'm going to start using that.
I better start using that, because whatever you used before didn't work that well. I'm dead serious, okay? So I'm not saying the RSI. RSI is a function. It's like I said, the fast and slow stochastics are a derivative of the RSI. The underlying root is always the same. As a tech guy, you understand what I'm talking about. But this is a far better indicator and a visual indicator than I can deal with. And more importantly, look at the MACD, beautifully moving up on expanding histograms. So there is nothing definite, but there's a high. Remember, in trading, we deal with probabilities. We don't deal with certainties. You agree with me on that, right?
Yeah, of course.
Exactly. So we deal with the probability that God will keep us alive when hopefully tomorrow morning, so you can get to work and see your wife, and I can see my wife, my son, and my pets. And so you pray to God that He keeps you alive. I do every night before I go to bed. So it's the same thing with trading. It's probabilities that we deal with. A lot of retail emotional traders always want to deal with certainties. There is nothing certain in life, neither your life or trading, and that's a fact. So let's move on to looking at another chart. Let's take a look at and remember, every chart looks very different depending on the time frame you're looking at. So obviously the daily will look different than the 1 hour. So look at NVIDIA. What did I say about NVIDIA since you joined us, or your free trial started, and then you joined us as a member, which, thank you. You know, everyone. K-Bot, welcome Nazir to the crowd, all right? So So the key is what did I say about NVIDIA? When NVIDIA was, this one red candle would be like, oh my God, it's all coming down. This was like when it was at 164. The stock has now entered. What time was this? This was 9:50 a.m. The stock went to 174.90. It's at almost, it's up here right now somewhere. It has now entered the gap. So when you look at something like that, unless something, barring any major move, collapse in the market, general market gyrations aside, which is intraday move, the stock is at least on the way I structure it. Look at this line. It's heading towards 180 or 179. The stock was up beautifully. Calls were up beautifully. And since I recommended the stock, which was in the 140 plus, and again at the 160 plus, it's been moving more so in the 160 plus range because I was a little bit late to the game. Initially, we played this move. We actually played this move. We played this move, then I played this move, and then I re-entered here. I didn't do the whole thing, but it still paid the bills. So NVIDIA went to 177.50, $3 higher from here, heading towards 180. Is there anything about this chart that is not clear? Let me ask you that. Let's ask K-Bot the question. K-Bot, when you look at this chart, and you pretty much have seen a lot of my charts and what's happened, do you understand every single line that's in place? Remember, this was the last level, 174.70. This was back in December where the stock pulled back from, and guess where it went? It went to 174, and then it basically shot up to 177. On the market pullback, it came back and rested right here. This was the opening at 9:50 a.m. K-Bot, any questions on this chart that I can help you with?
No, I understand it.
You understand what I'm saying? So this type of trade you can do both ways from a tactical standpoint. You buy a bunch of calls, the stock opens up $3-4, you take down the profits pretty much right away. I'm not telling you exactly what to do, but that's what I would do. Then you buy, as the stock is moving higher, you buy cheaper, higher strikes, still going out to the end of the month. Now, why do I focus on the end of the month? For the same reason I explained in the last webinar, the same reason CNBC picked up my comments, well, kind of figuratively speaking, and said the same thing, that fund managers are now rushing to add these big names in their portfolios on the ones who don't own it to show they own it so they can end their quarter at the end of March and look like heroes. It's called window dressing, portfolio markups, adding beta, which is high momentum stocks, to provide alpha. Alpha means returns. So they're going to chase these stocks. And the chase hasn't even really begun. The chase begins in the last 5 trading days of the month. 5 to 7 trading days of the month. So this gap, this 180 is very doable. And this upper gap around 195, I don't know about that. But it's doable because technically speaking, this pattern at one point or another has to be completed. This gap at one point or another has to be filled. So if it's that obvious, why wouldn't you have some position in the stock, and as it's moving higher, you take those down and you buy some higher strikes, as I keep on recommending? It's not rocket science. You want to take down your nice profits and the ones which are already in the money because I asked you to buy them and then they went above that, then you buy strikes $2.50 to $5 higher. So if they blow up, at least you kept all your money from the initial trades. Is that clear to both of you? And for everybody else who's going to listen to it? Who's going to listen to this? Exactly. Yes. That's the way you do it. That's called effective trade management, what we call ETM. Look, I'm not an idiot. If I got a bunch of profits, I don't know what a market is. Look, the market is a bastard. like we say in New York, okay? And I know every corner of Wall Street. The market is a bastard. They will do anything to take your money away. So if you're up on something nicely because of all these beautiful alerts and tactical charts, blah, 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 then obviously you want to take that down and then buy some cheaper calls so you stay in the game. The market is not in the business of giving you free money. You have to fight for it. The only way you fight for it is through these charts. When was the last time you walked over to somebody in the street and said, give me $10,000? Yeah, right. Try doing that. Can't even get that from your family, let alone anyone else. So why should the market give you $10,000 unless you fight for it? Think. And that's a fact. Let's take a look. What's next? 1 second. And I'm going to wrap this up. Oh, MU. I like this one a lot. So here's MU. You got a very severe pattern. You also, Micron. We have traded multiple times. I mean, we've traded mostly on the upside, okay? The stock has gone from 28 and now it's up to 44. Now, the average retail trader will say, oh my God, it's up from 28 to 44. Who gives a shit? It's not where it's coming from. Is it where it's going? And where it's going is somewhere, not to the moon. It's going to 42, and if they have great earnings, it's going to 44. And if they have crappy earnings, it's going to fall to 38. But even if it comes down to 37, it creates a beautiful head and shoulder, inverse head and shoulder, right shoulder, left shoulder, head, and you want to buy it. And if it goes up towards the neckline, these are multiple necklines, then you want to sell it. If it breaks the neckline, you want to forcefully buy some higher strikes. And these things are cheap. MU calls were $1. I would have alerted on Micron today, and they were at $1.30. They went to $1.70 and change. Beautiful returns intraday, and then they closed. They went to $1.95 actually. The 40 and a halves I showed at it showed the 40 and the 40 and a halves, I believe. Yeah, they were like $1.45 at the low, $1.95 at the low, high, and they closed at 170. But look at the pattern. That's what technicians look at, or at least guys like us look at who are robotic. This is what's going on. Here's your neckline at 42. So if the stock goes up $2, those calls will be a double. If the stock gets up to the second neckline, then you're going to make a triple or a quadruple. It's really nothing to say. All these are cooperating. The MACD, the stochastics, the McClellan oscillator, they're all good. Ah, thank God it got bigger. What did I do? Hey, I'm a genius. I figured out something. Okay, now we're talking. See what I'm saying? That's a very bullish candle that was at 10:30 in the morning. And it moves in pennies. Micron doesn't, unless it's a big move, it doesn't normally move $2, $3, right? So I'm still thinking if their numbers are good, and everything is a calculated bet, right? Obviously, it's good for 44, major pattern completion. If it falls hard, 37, in which case we buy. These are all shoulders. Does it go to 33? Well, it's completely horrible. It'll go to 33. But the last time I checked, Micron has very seldom dropped $7. But anything can happen. So you don't have to hawk your whole book on that. They're cheap calls. Buy a bunch. But you can see defined head and shoulders. Head, shoulder, 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 shoulder. Kramer was explaining head and shoulders yesterday. That was pretty funny. Okay. So this is a good looking chart. It doesn't matter whether you bought it at 31, 33, 36. It doesn't matter because you weren't there. It's not where it's coming from, it's where it's going. If everybody's, oh my God, I can't buy it, it's too high, then they would never catch an Amazon when it was at 1400, 1500, 1600, and now approaching 1800. Because it's too high. How the heck do you know what's too high? Only the charts will tell you what's too high. Any questions on this?
No.
Good.
No, that's clear.
Yeah, because what it is, I'm explaining technicals, but I'm also injecting, and for everyone else who's going to hear this, I'm injecting your mental, what we're doing is mental calibration. I do this to myself all the time. I'm no different than any of you guys. What am I, better looking? Yeah, maybe I am. I'm just kidding, all right? For an old guy, do I look really fit? Yes, I am. Okay? Do I have a very strong belief in God? Yes, I do. Do I think that everything in life is hard work? Yes, I do. Do I believe in welfare? Absolutely not. Do I believe in hard work to make money and support your family and give to your favorite charities and do all the right things in life? Yes, I do. So trading is about mental calibration. If you don't mentally calibrate, you're always going to be effed. Can't even use the, that word, right? Totally. So if you mentally calibrate, then charts will talk to you better, your trades will be better. This is NVIDIA on a short-term basis. Look, this is a 1-hour chart. You could trade this and take down some nice profits and stuff. Know when it's going to hit the block. It actually broke up above that, went to 177 and change, and then came back and rested as the market pulled back exactly at this level. 174.90, NVIDIA closed at, and I had shown the hourly chart. This was the gap at 174.79. You can't get any clearer than this. This is Facebook. Facebook was Facebook so far is still going to bounce. And then good old my New York buddy Donald started pissing on Facebook. He likes to piss on companies, which I totally am against. You don't attack U.S. companies, but he seems to like doing that a lot. So that part of him I do not like, because American business is what makes America great. It's not the politicians. So the bottom line is he started attacking Facebook, and Facebook still held up, but it pulled back to about that 161 level. It was destined to go to about 165 today, believe it or not. But he attacked Google. Google didn't give a shit, went the other way. And he attacked Facebook and Twitter. I'm not trading Twitter, so I don't really care. But this was unfortunately, Facebook could not get up there, even though its charts were pretty good. They are linking PayPal with Instagram. This is a huge thing for Facebook. But political attacks against U.S. companies sometimes can stop the technicals from working out, just so you all understand. Avago, what a beautiful stock. The stock's going to 310. I said it was going to go past 300. It did. We were long earnings. It is so clear. Look at the channel. Barring any major hiccup in the market, the stock is good for another $10. What more could you ask for? You think the fund managers are not going to be chasing Avago, which is Broadcom? I don't know why they named it Avago. It's like such a fancy name. What does Avago mean? I'm going to look it up on Google. Avago. Wow, sounds like a nice drink. So Avago is Broadcom, and it's clear. So these are the type of trades you want to sit on or trade if you don't want the complexity of these back and forth type of volatility. This is a clean daily chart. Do you both agree with me, or yes or no?
Yes.
Yep.
There's nothing to it. There's nothing to overthink. I'm the first one to blame myself. Sometimes I overthink too much, even though my charts are dead clear. Sometimes I don't overweight myself in stocks which are dead clear, like Apple, like Amazon, from certain, or Avago. Even though I'm in the trades, I should be overweighting them and just sitting there. And watch the count just give you free money. That's how you got to think. Mental calibration. It's hard. It's hard. And why is it hard? It's not necessarily your fault. And for anyone else who's listening to it, it's the fault of these absolutely manipulated algorithmic high frequency trading programs that constantly move in and out of the markets like slimy eels. That's what they do. They remind me of slimy eels. You ever seen eels in a thing? Freaking in an aquarium or in a tank? They just move around. You know what I'm talking about? Like you go to an expensive Chinese restaurant, they're like, which eel do you want, sir? I love eel, by the way, especially Japanese eel, unagi. Okay? So they like slimy things. That's what these algo HFT programs are. So you got to grab them and chop them, fry them and eat them. Do you know, you guys eat sushi?
Oh yeah.
K-Bot, you, what?
It has to be cooked.
Obviously, it's got to be cooked. Do you? I mean, obviously, you don't know sushi. Most good now. I mean, have you tried the unagi don, which is rice over eel? It's cooked eel.
No.
Have you ever tried that? You love it. It's cooked, obviously, because if it's alive, it's gonna bite your head off. The tastiest thing. If you know sushi, Nazir knows, right?
Yeah, I make unagi myself too.
Oh, holy cow, man! You're advanced. You'll be a good trader. You make unagi yourself?
Yeah, I love that.
No kidding. I mean, I've actually bought unagi from this Japanese supermarket out here, which is serious supermarket. Like, it's so expensive. So just bought some, and it's just amazing. But I love going to the sushi places. So algos are like eels. After we finish this, everyone is going to listen to this. Please go pull a Google YouTube of eels in a tank. See how they're moving around like snakes. That's what algorithmic high frequency trading programs are. So in the meantime, let's keep an eye on the bigger picture. We always have to be alert. I always do my job of showing you guys a lot of short-term pictures so we know what we're dealing with. Look at this move here. Look at price line. I should have overloaded big time, even though I'm scalping it here and there. This move alone from 1700, the stock hit today, despite a downgrade. Despite a downgrade, the stock went from 1740 to 1787. That's a $50 move. 1787, it's approaching there. And this is just here. What if it closes the gap here? And I told people, go out there and buy the 1820s. You'll make 100, 200% on them. It's not where it's coming from. It's where it's going. And there's a big fat gap here. And all this was the drop on earnings. So that's it. So ladies and gentlemen, I think it was a little bit eye-opening for all new members or anyone out there who's going to listen to this tonight. It is always, and I mean this, a learning experience for me trying to teach people what I have learned the hard way and still learning every day. It excites me. It energizes me. I mean that. All right? This is not the Oprah show where they're faking a lot of stuff. All right? This is the real deal. It energizes me. When I'm training people, when I'm working with good new members, other returning members, interaction is good. Let's just make it happen. When dangers come to the market, hopefully I'll be able to tell before it happens. But please, you need to be involved. If you're not involved, you're going to miss out every single frigging trade. Do I think the market's going to the moon? No. Do I think that we're reaching some upper levels very close that we can start to slow down a bit? Absolutely. Listen to my previous webinars. Do I think the market has a good shot to get towards the 2880, 2900 level by the end of the month? Yes. Will that pull up some stocks? Yes. In the meantime, we always have to watch for the dangers. That's what my job is, to keep you guys informed during the day. So good luck to you all. Good luck trading. And thank you for being here. Have a great evening.
Thanks,
Thank
Frank.
you. Bye-bye.